thing, right? Consumers, especially the core consumers of energy drinks, are the millennials, with 64% of millennials consuming energy drinks. Millennials love energy drinks, but they hate the ingredients list, right? In this research, 74% of millennials are expressing concerns about the safety of energy drink. So this obviously makes our brand story very relevant for consumers, but it also makes our brand very relevant for retailers who also want to see this category keep growing. It's an important category for especially for convenience store retailers. And we bring a solution that makes this industry more sustainable for them. And we have proven that we can grow the category for the retailers. Big industry with a big problem that is dominated by two big brands, right? So for the last decade, pretty much consumers and retailers were looking at the energy drink category, thinking this was simply a two-brand category, right? Dominated by Red Bull and Monster that own more than 70% of the market. Everybody agrees that this industry is pretty much ready for disruption. And the disruption that started a few years ago with Bang, that started disrupting in the performance energy space. Lately, there has been Celsius that has been a disruptor in the better for you, not really better for you, but more fitness and weight loss energy drink. And there has been Guru, the story with Guru taking the number 3 spot in Quebec here, ahead of Pepsi-owned Rockstar with we have now more than 13% market share in Quebec. So we're the number 3 brand. So again, most people looking at this industry closely are seeing dramatic change happening over the next decade in this industry. Now, if you look at the Guru and the Guru benefits and the Guru advantage, we obviously need to first start by the product. Guru offers a very different product with real tangible differences and benefits for our consumers. It's an energy drink that our consumers can feel good about drinking and feel good about the benefits that our product delivers. So if you look at the grid, you see that we don't use any synthetic caffeine, which means you don't get the energy crash and the jitters associated with synthetic caffeine. We're certified organic, we use plant-based. We don't use any artificial sweeteners like sucralose and aspartame. We don't contain any taurine, but we do have a similar amount of caffeine compared to our competitors, where caffeine comes from natural sources instead of synthetic sources. So a very different product, but also a very different brand, and that's very important in this industry. And so on the left of this slide, you're seeing a glimpse of the Guru brand positioning, which is good, natural, authentic, progressive, and adventurous, as opposed to what you're seeing on the left, right? And there's no doubt that what you're seeing on the left has done wonders for our competitors. Like, this is what we call internally teenage boy marketing, which has been very relevant for growing these energy drink brands. But now times have changed and consumers are evolving, right? And all our consumer insights are showing us pretty much the same insights. Awareness to environmental and social issues are increasing. Burning fuel and burning tires is not really relevant in the age of global warming. Extreme sports are not as trendy as they used to be. Using sexy girls and bikinis for marketing purposes is clearly not relevant for the progressive females of 2021. So we do a marketing and branding, which is much more in tune with the aspirations of the next generation of energy drink consumers. So the outcome is that Guru not only offers a great product, but it also offers a relevant brand for our consumers. That's on product and brand. Then I'll move to our strategy and our growth strategy moving forward. We have been, as you can see from this graph, right? We've been very successful. We've tripled our sales over the last 5 years. We've maintained a 34.5 CAGR over the last 3 years. We had a record quarter in Q1 of 2021, which we released a few weeks ago. So 2021 is on trend to be another great year, despite the ongoing pandemic that's impacting the convenience store channel. The important point noting as well is that most beverage companies our size, have a significant cash burn year over year. And we've done our previous performance always being a profitable company. Obviously, by becoming public, we raised a $34.5 million that we want to reinvest in growth. And this money is going to be used to accelerate our growth over the next few years. Now, if you look at some of more of our results, in summary, we are in a very, very solid financial position with $30 million available. We have industry-leading margins of over 60%. We've had 5 years of consecutive record growth. We're now, as I said earlier, we're the third largest energy drink brand in Quebec. And we just launched 2 very successful innovations over the last 2 years, of which our latest one is the most successful product innovation in the Quebec market, our Guru Yerba Mate, which we launched in November, which is the most successful product innovation of the last 52 weeks. Let's grab a little bit of water. Now, if we look at our growth plan moving forward, this is a summary slide of our four main growth pillars. On the left, you're seeing the 2 pillars of Canada, then US, and online. Quebec is really about continuing our growth, continuing the success story that we have built. We're confident that we can keep growing in Quebec and double our sales over the next 4 or 5 years. What we just announced lately is we are launching in the rest of Canada, or Ontario, West, and Atlantic. So that's also a very important pillar for growth, and I'll speak to that in a few minutes. And then in the US, we have remained focused for the last few years on California, and then we're expanding methodically across grocery, drug, and natural channel across the US, but always maintaining the focus on California at first. Online is becoming more important for us. We've seen a lot of data that we see consumers being very loyal to our brand, very repeating often. And COVID has accelerated the momentum for online sales, like for many brands. So increasingly an important pillar where we're going to be starting to invest more in consumer acquisition. So as I said, this is just an overview slide, and then the next few slides are diving a little bit more into details of each of these markets. So Quebec is our home market. This is where the story started in 1999. We are now the third largest player at 13.7 market share. We can become number 2 in this market, right? And we already have banners where we are number 2, and some very large banners. But in order to gain market share in this market, we need to continue improving our execution at retail. We need to continue investing in marketing, and we need to continue to invest in new innovations, successful innovations. So this is what really you should expect in the Quebec market over the next few years. Now, looking at Ontario, West, and Atlantic, this is really our first expansion, and this is the first big move we've done after becoming public. You need to keep in mind we had strategically delayed this launch despite retailer interest, because we wanted to make sure we would launch when we would have the means to support not only the distribution expansion, but also the marketing expansion that needs to come to support the distribution. So we already had limited distribution in Ontario and West in the drug and the grocery channel. So most of the expansion is coming now from new convenience and gas doors, which we announced a few weeks ago. We're expanding to over 2,500 new doors over the upcoming weeks. And we're going to be supporting this distribution agreement with a 2-year marketing campaign. Our goal is to reach 10% market share in this market over the next 4 or 5 years. Now, if we look at the United States, as I said, California is going to be in the short term, the focus market in the US. This is where we've seen our greatest success so far. California was chosen for the consumer profile, but also from the retailer footprint. Our US strategy is to be very targeted and methodical, right? So we're seeing success. For example, we've seen 35% growth over the last 12 weeks in California and grocery. We just announced 800 new doors in California, and we're going to be supporting this again with marketing investment. Outside of California, this is we're implementing a multi-channel strategy, which means all retailers play a role, and we're being very methodical about how we select retailers and selecting the retailers where we believe they have a great fit for supporting better for you products, but also a cost of entry that's reasonable and a cost to play with these retailers where we think the payback can exist. So expect most of the activity coming from California, obviously with some methodical expansion across the US over the coming years. Now here you see a little bit more info on the ownership of Guru. The key takeaway here is that the founders and insiders have over 63% of the shares, right, of a market cap of approximately $500 million. So needless to say, our interests are very aligned, and we're very motivated by our mission to clean up this industry and to make Guru an outstanding success. So finally, this is really my last slide to summarize this opportunity. But we know that Guru's success is the result of our mainstream taste and our differentiated product and brand, as I said in the beginning. We are solving the industry's biggest problem, that consumers are scared of ingredients. We've always been profitable, but we now have more resources than ever to reinvest in our growth and accelerate our growth moving forward. We have a passionate and experienced team now that is dedicated to cleaning up the energy drink industry that is ready for disruption. That's it. Thank you very much, and thanks for listening to our story.
Thank you, Carl. I think it was an extremely informative presentation and very well presented as well. Just for the attendees, if anyone wants to ask a question, they can sort of raise their hands, or alternatively, they can also chat it in the window, and we'll be happy to sort of address them in the remaining time that we have. But I'll just start off with one of the questions. I think, Carl, you had mentioned it in your presentation as well, the online part of the business. Where do you see your online business after COVID?
Well, we think that the momentum we're seeing in online is going to continue post-COVID. Right? We really do see this channel as, especially for the type of consumers that we're targeting, we're seeing that there is a real need for what we call a 360 approach. Right nowadays, more than ever before, the consumers that we're targeting also wants to buy in physical stores, like convenience stores and grocery stores, but also wants to have the opportunity to buy online. And we don't think that's going to change post-COVID, certainly, right? The other beauty with online is that it allows us to build our brand directly with consumers, right? So we target them, whether through our website, through social media, or to Amazon. We target them, and then we have the opportunity to convert them to consumers, to becoming consumers of Guru, either directly on the website, or if they prefer, they can go and try and sample our brand in a retail location before they commit to buying a larger format online on a website. So very encouraging result on this front. When we look at the consumer data and our consumers online, we see a very high loyalty, above 80% repeat rate. And we're also seeing that our consumers are repeating often throughout the year, which makes it a very profitable business for us.
And if I rightly remember, you also sell it through the social media platform. So for instance, if you have a large following on your Instagram account for Guru, that also acts as a sales channel.
Yes, that's it. Instagram, for example, is more for brand building, but once in a while we'll have a promotion ongoing, or we'll have sponsored posts towards the right audience to drive them either to our social media posts or to our website. And then we can follow consumers along the journey, right? Either targeting them with an online promotion or a retail promotion to convert them, depending on the strategy for conversion.
Okay, yeah, no, that's great. Just when you're taking this expansion outside of Quebec, part of the success is really going to be how your marketing dollars are being spent. So If you could tell us a little more about your marketing model and how you're sort of building that brand in new markets.
Yes, maybe I should, to answer this question, it would be helpful because there's a great slide in our presentation which speaks. I'll just share this slide. It speaks about our two-step marketing model. Let me share that slide here. Right? Do you see the slide now?
Yeah.
Yes. So this two-step model really starts with, as for example, when we enter a new market, the first step we're going to do is to try and be as close as possible to the consumers to generate interaction with consumers, but mainly trial. So it starts with the product appearing on the shelf, then us merchandising at retail, installing very disruptive POS to make sure that we grab consumers' attention and they try our product, right? So, and retailers are offering, for example, Circle K in Canada offers fantastic tools to generate trial at retail. But then we'll do in-store sampling, we'll do disruptive POS, and we'll do sampling around stores. So sampling and trying product, what we call liquid tulips, is a fundamental first step to generate velocity for retailers in the initial stages. Then as our brand is more established and distribution grows, then we go into more of a mainstream, broader marketing where we focus on awareness and consideration. This is where we're going to start using social media. We're going to be using influencers, brand partnerships. We're going to be using PR to really drive more of a consumer attention than to bring them into stores looking for Guru and then converting to trial. Because once we know that consumers are aware and try, the growth of this brand has really been fueled by the loyal consumers, that once our consumers try our product, they become very loyal and they even become ambassadors for our brand. So this has been our marketing model for many years now. It's proven to be a very efficient and effective marketing model for us. And this is what we replicate when we go into a new market.
Well, that's great color. And just talking about your products, I know you had previously launched Yerba Mate, which was quite a success. So I'm just wondering if you could speak on this life cycle of your products and if there are any upcoming products that we can expect in terms of new launches.
Yes, I think that the first thing to note is that innovation is in Guru's DNA. Right? We were the world's first natural energy drink since 1999. In the last 2 years, we've launched 2 successful innovations. If we're going to be, I think there's no doubt we're going to be launching new innovations in the market, and they're all going to be around the same. What we do is plant-based energy drinks, right? So this, it's going to be in the energy drink space, and it's going to be plant-based. What we do is we manufacture energy drinks with a short list of very strong botanicals that provide functional benefits. So expect more in that space. Unfortunately, I can't tell you more than that, but there is going to be more to come for sure.
Yeah, that's fair. And just more of a broader question. What's the sort of, you've highlighted it in your presentation as well, but the long-term vision for Guru and where you see the potential market evolving in, let's say 5-10 years?
Yes. Well, obviously, when we went public, we did a lot of presentations, right? And for us, Ingy and I worked a lot on modeling our 5-year plan and stuff. And there's a portion that we can model, and there's also the opportunity, right? So we always do this in 2 ways. The first way we do this is we model this into a plan that we can execute, and this is what we've been focusing on, right? So this is the portion we call bottom up, right? So we'll look at how many retailers realistically can we get. And so this translates in the number of doors, and then each door can sell so many products, and each of the products are going to sell so many cans a week. And this is how we model a plan that we're really confident presenting to investors, right? And builds a bottom-up plan, which is already very impressive. But then there's another way to look at this, right? And this is where some people in the industry are looking at the potential, and obviously we are looking at the potential for this brand, and we look at the success we've had in Quebec. And there's no debate that the mission we have is to clean up and transform this industry, right? So in a $15 billion industry for us, we don't think that in a decade from now, the industry is going to be the same, right? And we don't think it's unrealistic to think that we can replicate California and then across North America, right? I see my internet connection is unstable. Am I breaking up or no? I'm still good.
We can hear you fine. Yeah.
Okay. So yes, there is a lot of potential for this brand. There's a lot of work ahead to get there. So I'm not saying we're going to have 10% of North America tomorrow morning, but what we're saying is that the potential is there for a brand that is very different, both from a product perspective, but also from a brand perspective. We need a lot of work on the distribution side to make sure we get access to all the retailers, but also from a brand marketing side to make sure that consumers are aware that there is an alternative for what we call artificial energy drinks.
Fair enough. And I think we're closer to the end of the session, but I have received this one question in the chat. It says, can you ask how online sales can become profitable given shipping costs? Is there another established beverage company that sells online?
Yes, there are many established companies that sell online, especially through Amazon. Right? Keep in mind, we recapture, and maybe you can add to this, but we recapture some of the margins that retailers make and some of the margins that distributors make, which is more than enough to pay for the shipping, right? And when you scale, you negotiate better prices with shipping companies, and Amazon is also a profitable channel. I don't know if Inji, you want to add to the profitability of online sales?
Yeah, you spoke about Amazon, but even on our website, right, where we're direct to consumer, that's where you have the opportunity as well to take on higher margin. And it's also in the way you approach the customers and the offers you offer them, right? The more cases we sell per purchase, the least expensive as well it is for shipping. So we're also working with our partners to make sure we have better deals. So it is a profitable channel.
Yeah. We're really not the only brand placing a bet on this. Obviously, the format is larger, right? We're not selling single cans online, right? We're selling cases of 12 units or 24 units. So, again, this is where you need trial mechanics. You need to be advertising. You need consumers to try your products and then convert online. So this is more of a strategy that is required. The bigger opportunity for us is in the US because our distribution footprint is not the same, right? Remember, we're focusing more on the distribution in California. So for us, in order to have access to all the consumers outside of California, although we're distributed in Whole Foods and we're in Kroger and we're CVS and Rite Aid, we're not in all the grocery stores and all the convenience stores. So it allows us to be able to provide our brand and make our brand available for consumers in that space as well, right? While in Canada now, with the footprint that we have, we don't necessarily need online as much to access our consumers, but our consumers may want the opportunity to buy a full case once in a while because they want to stock up or because they're working from home and they're not going out as much. And there's various reasons why consumers now just want to buy online more than ever before.
And I think it's a trend that's here to stay. We all see that, right? With COVID, it spurred it up much faster. But I mean, it's a trend that we're seeing is here to stay for convenience and for many purposes.
And I would think that if at certain stage, a certain brand equity or brand following people would then prefer, ordering it directly online rather than sort of going anywhere else.
Yeah. It really depends on the consumer. And again, this is something we're seeing in consumers' insights. There's specific segments that have strong interest for buying beverage. And there are large segments that have strong interest for buying our products online.
No, that's right. I think we've come close to the end of the allotted time. I really appreciate it. Thank you, Carl. Thank you, Inji. It was an extremely informative session. I think the question and answer session was really informative as well. Once again, I really thank you for your time to come on our platform and sort of share your story. So really appreciate it. Thank you. And we look forward to seeing you again as sort of quarters progress. All right.
Thank you, Noman. Thanks to you and the team.